Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have on store for this week with economic data that might impact stocks and bond markets. I'm Scott Nasca, President of Generation Capital Management. A tough week last week for markets as we had the Dow Jones down 4.4%, S&P down 4.5%, and NASDAQ down 4.7%. I'm sure you're well aware of events that came out towards the end of last week with Silicon Valley Bank and what the Fed and FDIC and Treasury did over the weekend to basically close the bank down, guarantee the deposits of all depositors, and try and limit the contagion in terms of spreading to other banks out there. The Fed also is going to be using a window where banks can turn in their longer dated bonds that are underwater and get cash for those to strengthen the balance sheets and basically strengthen their overall balance sheets, as well as give a little confidence to the markets out there as well as their depositors that everything is fine. So we've been talking for the last year about the bond market, and this is something that every week I've talked about and said, pay attention to bonds. We have 2-year right now at 4.15%. 10-year at 3.50%, 2 years down almost 85 basis points or more just in the last couple of weeks. So the spread between the 2-year and 10-year has dropped precipitously. We're looking at right about 65 basis points right now. It was over 1% last week. So you're seeing basically an inversion or a slightly lower inverted yield curve. Steepening of the yield curve, which means that bonds at the short end are coming down more, which tends to believe that the Fed is going to be not as aggressive in their terms of their interest rate policy going forward with Fed funds rates. So last week we were seeing a couple more moves in the Fed funds rate, Federal Reserve, where now a lot of that's being taken out of the markets right now. So you're seeing the shorter end of the curve drop down, whereas the longer end is moving down, but not as much as the short end. So keep an eye out on that. What that's saying is, we're looking at, tough economic and recessionary times. That's what the inversion said. And that's what we've been talking about for, the past 6 months to a year. So, look back at some of our other market mashups where we've talked about the bond market and the inverting of the yield curve. A lot of data coming out this week, in terms of economic data. We've got the CPI print coming out on Tuesday, PPI on Wednesday. Those are two things you want to pay attention to because obviously the Fed has been using those as the main reason to hike rates to try and stem inflation. So hopefully we'll see some inflation numbers coming down, which will give pause to the Fed's aggressive actions. If inflation continues to move higher than expected, the Fed might be in a little box in terms of how aggressive they can be on interest rates, and it might be more of a protracted, longer term problem taking place. We have retail sales on Wednesday. Housing starts on Thursday and consumer sentiment on Friday. So it's going to be a lot of news coming out this week. Markets are probably going to be very volatile. We've been talking about that, for the beginning of 2023, that we thought that be a lot of volatility in stocks and bond markets, and it is, is holding true at this point in time. So have a long-term plan in place. Just make sure your investments are allocated the way that they should, based off of your risk tolerances and your goals and objectives. Be happy to help out any way we can. Take a look at our website, www.gencapmgmt.com. We're here to, take a second to give you your portfolio a second opinion if you'd like, just to make sure everything is in line. Make sure you at least understand the risks that your portfolio has, so that they align with your overall goals and objectives. We've got a lot of financial planning tips up there if you'd like to take a look at John's top tips. Take a look at some of our old market mashup recaps that we've done over the past few months. Like I said, this is something that we've been talking about. Keep an eye on the bond market. It's coming true right now. You're seeing some major moves in bond yields. So, just keep an eye out what's going on out there. Like I said, we're happy to help out. Give us a call. Reach out to us through email, sNASCA@gencapmgt.com. Be happy to help out any way we can. But just, be ready for just a volatile week. And like I said, don't try and do any knee-jerk reactions. Just make sure your portfolio's in plan and look for the longer term. And like I said, seek out professional advice if you do need to want to have a second opinion. Once again, my name is Scott Nasca, President of Generation Capital Management. This is Market Mashup. Have a great week.